After 3 up days in a row, we had 3 down days in a row, and then yesterday we had this long bearish tail in the market, where at some point yesterday the market was very high above 2110. The high of the day yesterday was 2112. Then we closed lower. We ended up the day still higher, 0.31%, just at this 2100 level. We closed at 2099, which is right at the 2100. So the market is still figuring out which way it wants to go. Notice that this 200-day is still rising. The 50-day now has been declining for a while. It's possible that at some point these two lines would converge. And that would actually be interesting because we haven't had that for a long time. I could probably go back here. But before I do, if these two lines do converge, then we just have to see how they resolve that convergence. If the blue line continues to go lower below the 200-day, then obviously that would be a bearish line. Or the blue line could bounce off the 200-day and shoot up, which would be a bullish sign. At this point, the market's still been flat. Yesterday was a slightly bearish day. I mean, it was a bearish candlestick on an overall flat to bullish day. So I'm still in my longs. The market, I think, is still going long. The burden is on the bears to prove that the market will go down. So today is Wednesday. It's Wednesday morning. So we'll see what happens today in the market and for the rest of the week. I did notice the other day that there's a headline. This particular headline, this is from Huffington Post, but you could really find this headline anywhere. Hillary Clinton wants to increase taxes on short-term investments. So aside from whatever the politics is of this campaign proposal, she wants to raise short-term capital gains tax. It kind of brought to me the idea that it's possible that if Hillary Clinton were elected as the next president, maybe that'll be the top of this bull market. So the election is next November, and my thesis is, or my theory is that if Clinton becomes president and income inequality is a big campaign issue for her, and if she proposes to raise taxes on investments or other things, then the market could possibly interpret her election as a bearish signal, and as a result, they may start selling their positions in their capital positions, and that could actually be the top of this bull market cycle. It's just a theory. It has nothing to do with politics. I'm not saying whether her proposal is good or bad. But if it happens that way, then I could imagine that in 2016, so we're talking next November, about a year and a few months away, that could be the top of the market wherever we are, whether it be 2300, 2500. And then for the next year or so, during the first year of her presidency, we could see a bear market. It's just a theory, an idea that I had. But here's a longer term chart of the S&P, and you could see we're still really going nowhere, but we're kind of just been flat for the year. Not much more else to say. Everything else is just as we had seen it a week ago. So let's see what happens today and for the rest of this week, and I will talk to you tomorrow.